Hi, this is Lee Phillips. I'm an attorney. Don't hold that against me, as I always say. I want to talk to you for 2 seconds about calendar year taxation. If I have a corporation and it's taxed under subchapter C of the IRS code, you're going to call that a C corporation, then I can choose a calendar year. If I have a corporation taxed under subchapter S of the IRS code, I have to use the calendar year rather than choose a fiscal year for the company like I can for the C corporation. The reason is the S corporation is a pass-through entity. The corporation itself doesn't actually pay taxes. In a C corporation, the corporation itself actually pays taxes. But in an S corporation, it passes through to the individual owners. They get a K-1 and then they pay the tax. So it's a pass-through entity. As a result, those individual owners are going to pay the tax December 31st year end. Therefore, the company has to have a December 31st year end. And that would be the same for an LLC taxed under subchapter S of the IRS code, or an LLC taxed as a partnership or sole proprietorship or whatever it is. That company is going to have the calendar year as its tax year. Let's go back to the C corporation for 2 seconds. That pays its own tax. It gets to choose its tax year. And if you choose the tax year in March or whatever it is, and you've got the right accounting stuff, receivables, this and that and the other, then you can postpone the taxes on those for a period. And you can get the value of the money in your pocket rather than paying it to the IRS's pocket. It's kind of a trick that they use in C corporations. It works. Are you going to use it in yours? Probably not. You're not running enough money through your little company to ever justify that float on the money, basically. So why have a tax year as a C corporation and stagger it? Not a lot of little businesses get much benefit out of it. The fact that you can't get money out of the C corporation except by paying a wage or a dividend, double taxation, and you can look at another YouTube video that I have on double taxation. But the only two ways you can get money out of the C corporation is the wage and the dividend. We can get money out of the S corporate tax structure, LLC or corporation taxed under subchapter S, or the LLC taxed as a partnership or whatever it is. We can get money out and not have it be subject to the Social Security, FICA, FUTA, and everything else as a wage. And we don't have double taxation when we take it out as, we usually call it a distribution, rather than a dividend in the S corporation. So why do you have a C corporation? I'm not quite sure. Maybe for this calendar year, but probably not justified. This is Lee Phillips talking on calendar years or staggered tax years in a C corporation.